Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. Happy August. How are you so far this month?
Yeah, hi Mel. It's good. Yeah, as you say, it's still summertime. That's very nice. But it's also busy summertime. So it is full speed here. The markets are interesting as well. So
Yes.
yeah, it's just everything's good, so to say. Yeah. How are you?
Well, as you said, very interesting economic news coming out and about so far the first week of August. I've been mostly trying to digest and look beyond the political and business news that we're always monitoring here at Greens. And of course, we try to make sense of these headlines as well. Speaking
Mm.
of that, we do have a lot of topics on our plate today. Briefly, let's look at what we have for this episode. First, we'll look at two economies in Asia, Indonesia and the Philippines, coming out with their latest GDP numbers. We also look sector wise and country wise in this very interesting best under a billion list, counting of several Asian startups with promising sales and revenue growth. We also look at India's conundrum with the whole tariff thing and pressure regarding its Russian oil purchases. And of
Mhm.
course, we'll also dive into the news about the Fed and the US jobs data and how we're projecting interest rates in the US. And of course, we do discuss our global outlook for the week. So,
Yeah.
Peter, let's get into the Asian economies first. So, Indonesia and the Philippines back to back GDP numbers for second quarter this coming out this week. Indonesia and the Philippines both came out with stronger than expected figures. Indonesia was at 5.12%, Philippines at 5.5%. Um,
Mhm.
both a surprising on news on the upside because as we know the second quarter was really when the tariff impact or the full rates came into force before another pause. For Indonesia, the numbers are mostly lifted by manufacturing sector that there has been an increase in production even if there has been a disruption in the tariffs because of the April 2 announcement. But there is some story behind that headline. There are reports that some firms are actually not feeling that growth at all, and in fact, they're
Mhm.
being fighting for survival or trying to um,
Um,
make ends meet right now because of the some trouble in competing with Vietnam and of course with rising pressure and harder logistics concerns because of the tariff uncertainty, Peter.
mhm. Is it domestic weakness, or is it that's after all the sort of the global economy is still? What are we seeing? You think?
It's actually a mix of for at least for Indonesia, it's a mix of both the uncertain, highly uncertain global conditions and domestic issues as well. So we know that they changed leadership earlier this year. With that came a change in economic priorities and spending priorities, and that has upset local sectors. So some sectors that used to enjoy a lot of subsidies or incentives are find themselves not abandoned but like less prioritized by the government or by public policies, and that there's been a change as well in how the government spends infrastructure wise, investments wise. So that has really rocked the boat domestically. So there are navigating two simultaneous changes at once, which is likely why the growth which looks really positive on the outside might not look might not feel the same when you're inside the country. The neighbors like Malaysia, the Philippines, they're also reporting better numbers. For the Philippines, growth was stronger. We were at 5.4% in the first quarter and 5.5 this second
Mm.
quarter. And that lift was because of agriculture.
Hmm.
Although it is coming from a low base, but we did
Mm.
not really see major changes domestically, which is probably why the growth is upward and more broad-based, Peter.
Yeah. So far, we see Indonesia as an isolated problem,
Mm-hmm.
predominantly domestic driven, when we are talking about Southeast Asia. Interesting, very interesting.
Let's zoom out a bit across the region, Peter. So,
Mm.
this very interesting list by Forbes Asia, it's called Best Under a Billion, which identified 200 publicly listed firms across Asia, which are not that big. So, they're small to medium term companies, and they are reporting really strong sales, strong revenue growth, and
Mm.
deemed to be highly resilient to tariff disruptions or global trade disruptions. So, a very specific criteria for identifying companies. So, actually, it is dominated by the list is dominated by Chinese and Indian companies, which of course are very kind of obvious because they cater to a really strong and really large consumer base domestically.
Yeah.
But I think the more um important thing to look at is the sectors which belong in these uh
Mm.
in the list. So a lot of the companies here are involved in IT services, data centers, software development, electric
Mm.
parts, even EVs, electric vehicles, and renewables. We also saw this trend in our first quarter global quarterly magazine. These are what we labeled as sectors of the future. It's really
Mm.
the direction of where high growth is gonna be, because that's the where the demand is. That's where economies, digital economies are headed. That's what they need. So that's really where the strong performers are. And a lot of it also cater to local demand. So
Yeah.
there's also food and beauty and pharmaceuticals. Beauty sector may sound kind of a surprise, but it's really like South Korean products. That's mostly where the industries are as far as the
Okay.
identified Korean companies are concerned. Not a lot of firms belonging to construction and agriculture as well, because yeah, we know that construction and real estate has been on a slump because of the weak Chinese demand, and of course the property sector trouble that they ran into maybe 3 years ago. So it's an interesting story. For the Philippines, there were five. Not a lot of these companies are that popular globally because they are in the mid to small sector at
Well,
the moment. But for the Philippines, one company I found interesting was this internet company called Converge. Well, this is not a stock pick, just something very interesting to point out, Peter. So this Converge is a fiber internet service provider. It
well,
is homegrown, and what's really interesting about it is managed to really take a huge market share away from a long-standing duopoly
mm.
domestically. So it
Oh.
it started in the northern part of the country and has now spread out nationwide in a matter of years. So that's I get why they're called strong and resilient. Another
Mm.
brand, which is again not a stock pick, that stood out to me was Yonex from Japan. So we've
Mhm.
known that brand for decades, but
Mm.
I think there's been a resurgence in like interest in sports and athletics. So it
Oh,
is
yeah.
seeing some renewed demand, maybe for racket players like tennis, badminton. So the enthusiasts are back. The fitness era is on. So it is riding on that trend as well, Peter.
Interesting. It's probably what we see as a growing sector in Southeast Asia as well, yeah.
Among the
Uh,
young ones, actually.
yeah. So exciting. Always exciting to talk about the specific companies or sectors, yeah.
Yeah, it's something
Um,
we watch out for always, Peter. Yeah, on to another neighbor, Peter. So let's look at India. It's now on Trump's crosshairs. They have managed to come from being so close to a deal with Trump to a major fallout over the past few days. So,
yeah.
um, Trump has been trying really to hurt India where it um by way of the its Russian oil purchases. And just a few hours before we went live, a 50% tariff similar to Brazil. That was very extreme at the time when big partners, major US partners are securing a rate of like 15%, 20%. Here is 50%. And it's really rooted on their inability to negotiate, and that it turns out now that there are India's Russian oil purchases and its refined oil from Russia is being the biggest sticking point that really stood in the way of a negotiated tariff rate, Peter.
That is interesting, of course, because it raises the question if it succeeds to stop the Indian oil import from Russia even more, would that then lead to higher oil prices?
Well, the thing about that, Peter, is year to date, oil prices are actually lower. In a way, when you look at it, India buying from Russia as well as China is
Mhm.
easing some of the demand that would have pushed global prices up if everyone was buying from the Middle Eastern OPEC member countries. Um, so in a way, this alternative source, although geopolitically in question, is helping keep the oil prices increase stable or like subdued. We have seen that at least the Brent crude price is about 70 a barrel, and it's
Mhm.
down 10% year to date. So a bit better than also when it was a year ago, it was down 14.5% year on year.
Yeah.
We also heard the OPEC plus members announce supply increases by September. So that should keep oil prices at bay. I'm not sure if that's enough to really pressure India to shift directions that quickly, especially that Prime Minister Modi just said now that he is unwilling to compromise and he's ready to pay for this cost personally if he must. So it's really a stalemate at this point, and it seems that they are not likely to disrupt or to change their purchases from Russia that big anytime soon. So oil prices should be relatively unbothered by that.
Yeah, we have the standing saying, okay, so far, the OPEC countries have been very open towards actually increase production whenever needed currently.
Mm-hmm.
We trust they will continue. So overall, even if India should stop its oil import from Russia and it should miss on the market, then we argue there'll be other sources where the oil can be purchased. And so. But there's also a sort of a particularly European angle
Mm-hmm.
in this Indian oil import. Because what is, and it is well known, it's no secret. It surprised people a bit in the start, but anyway, Indian oil refineries are purchasing the Russian oil simply to sell on the distillates, also to diesel and petrol, to the European market. Pretty long period in the start of Russia's war against Ukraine. We in Europe, we actually got a huge part of our diesel and petrol from India, and that was based on and
Or from
uh,
Russia.
Russian oil. Yeah. Now EU has hunted it, and from the 1st of January 2000, as of this year 2025, the pressure has been so big that the state-owned refineries in India, they have stopped this traffic. So they don't import any more Russian oil to refine it and then sell on the distillates to the European market. The private sector refineries are still doing so, but they have problems getting shipping,
Mm-hmm.
and that is due to EU also trying to block basically the purchase of shipping capacity. So the most import in Europe actually goes into Switzerland. It goes into, as a growing part goes via Switzerland. Now, interesting is if EU can get this traffic stopped so as well. Could it give a spike? Yeah, it could here maybe in the summertime give a spike in petrol prices. But otherwise, yeah, it seems to hold okay as a it's okay, yeah. But it is a risk for inflation on the upside. But this is a story, and this is a European angle in this in the oil story.
Mm-hmm.
Um, but it's as a EU is really also quite trying to crack down on it as the US is, and it's after all two major forces and should be
Yes.
expected.
The
Yeah,
biggest
it is.
plan is really to bring Russia, pressure Russia to sit down, talk peace with Ukraine. It has been trying to do so. I mean, the US and the Europe and every other ally is trying to force them to do that over the past years. They've not been successful at it. And this is another attempt. But in the context of a global trade war, it does not look as compelling either for India and for Russia as well. So yeah, we are monitoring that development.
Yeah,
Very, very
that's
fluid
interesting.
always.
Good.
We look now at the US, Peter. Of course, the other side of this
Yeah.
trade disruption is, of course, the US at the center of it. And very recently, another piece of interesting economic data is the US jobs report, the big
Mm.
recalculation of the May and June figures, as
Yeah.
well as the huge drop in July, which
Yeah.
is raising the conversation about a rate cut from the
Yeah.
Federal Reserve next month. We have
Yeah.
held our view over the past few months that we do not see the Fed cutting this year, anytime this year, which is a bit of an outlier against the forecasts from our peers in the financial markets. But
Yeah.
we should discuss our views about it coming with this piece of news coming into light, Peter.
Yeah. The also the down revisions, as you mentioned, of
Mm-hmm.
the labor market reports to really a significant more as a worse outlook than and situation than first seen. It of course forces us to think, to reconsider, and yeah, it should be mentioned when most of the market in the fourth quarter last year they expected two very fast rate cuts in
Mm-hmm.
2025, where we were saying we could not see that coming, and we argued against it, and so far it has been correct. So now
Yes.
now we are at a situation where we have some new data, weak data, and it is actually pretty weak. And another angle is what is happening at FOMC. So that is the American central bank, the Fed. It is what is called the Federal Open Market Committee, and that is
Yes.
actually their monetary policy committee. Again, it's American, very, very interesting construction, so to say.
Mm-hmm.
So what we have in this FOMC committee, it's a central bank. It is a committee within the central bank, but still, there's different areas from the central bank is represented in that committee. So we have the chairman of the committee is also the head of the central bank,
Mm-hmm.
and he's always voter. He can always vote. And then there are seven, we could call them division heads from the central bank, as from Fed. That is, they are voters always, as they always have a voting right, and they are sort of fixed members of the
Mm-hmm.
committee. The important is that they have the voting right. And then there are some rotating
Mm-hmm.
voting rights. So it means that geographical heads of the regional geographical heads within the Fed, they typically cover a number of states in the US.
Mm-hmm.
They they are called Reserve Bank presidents, and they have four voting rights. So in total, there are 12 votes on the committee, one for the chairman, seven for the division heads, and then four for the regional heads of the Fed
The
branches
Fed.
out across
Mm-hmm.
US. And they rotate. So all the regional heads, they have a seat in the FOMC, but not all of them can vote. So they can all say something, they can all whatever do act as they want, but only four of them have a voting right, and that rotates every year. So this is where the FOMC get complicated. So when we listen to comments from FOMC members, it is extremely important to remember, can they vote or can't they vote? And it is always so that, of course, the members who talk the most and are the loudest and sort of a bit more relaxed in coming up with a view are
Mm-hmm.
typically the members who is out of the voting right system. Yeah. So, and this is the past week. I noticed that there are more articles in different medias about FOMC members indicating that FOMC could point towards a rate cut in September.
Yes.
But at the same time, these articles they refer to FOMC members who are non-voters. It's interesting arguments, but it doesn't count and weight as much as when a voter says something. And the voters they are more quiet. But
Mm-hmm.
we should remember that last time in July, two actually from the Fed division heads, they were voting for a rate cut. So they're already two in that camp, 2 out of 12, so it won't win. But it's interesting to study where the regional heads are moving, as how are they positioned. This is actually what we'll spend a bit of time on. Right now, we still see the situation as Fed might keep the rates as they are, but that would be the inflation argument. And
Mm-hmm.
this is where we say, okay, do the tariffs spark inflation? Is a bit as we talked about the oil. Could that influence as well?
Mm-hmm.
All these things. That is speaking for having an unchanged. But on the other
Mm.
side, if the economy is getting hurt and we see the job market is getting much more hurt than expected, then and that is actually the reason why we now talk about
Could.
we haven't changed our view, but we are
Yes.
looking into it, and it's yeah, it's an interesting discussion, but it's also an important discussion. Yeah, and this is one of the things we do not just change the view
Mm-hmm.
and say, okay, then they probably lower the rate. Yeah, it requires some consideration, and this is actually sort of the things and the way we look into it is we actually try to track and see what. As we start with the regional heads that have voting rights, because as we can feel it's out there. There is sort of in some areas there is a move towards reconsidering. So we're trying to track, say, okay, what have they been in sort of in public gatherings and interviews? What have they been saying? And so this is where we start and see if there's any sort of can we feel a change in sentiment.
Mm-hmm.
Yeah, and then we look in a bit into some of the division heads if some has said something, but they're more closed. Yeah. So this is what we sort of we'll
Monitor.
spend some hours on until we meet again next week and see if we are concluded. We're not in a hurry. And of course, what would it mean if we change our view? Does it mean anything at all? That's another story. Good. So this is where we are on the Fed. It's an ever interesting story about what's going on in there. But it'll take some. It could easily take some attention in September when we are so far. Yeah.
Yes.
Well,
We have a lot more data points to consider. Anyway, there's still like 5.5 weeks to go before the next
mhm,
Fed meeting.
yeah,
So
exactly.
a lot more can change by then. We are, of course, keeping an eye on those developments, as we always do, Peter. Let's look now,
Yeah.
Peter, at the global outlook. We always speak in sunshine terms. We still do see that there is sunshine in the outlook. The global growth remains intact, although, of course, we see that headwinds remain, clouds remain due to the uncertainty, mainly with the trade disruptions. There is some clarity now because some of the major US partners have, for example, secured a deal with Trump, but many others have not done so. And that remains to be one of the key sources of uncertainty facing
Mm.
economies. Although in general, there are still reasons to believe that growth is strong, especially for Asia. We have seen in the past few quarters that there are growth drivers within the region and within domestic economies that is
Mm.
keeping us upbeat towards that part of the world, Peter.
Yeah. We're still happy. We still
Mm-hmm.
overweight risk. We still overweight allocations to stocks and different risk parts. But and we base a lot of our trust in the world on consumers, private households, that they are on the move forward still, regardless what politicians are trying to kill to tariff away. Yeah. But we are, of course, also aware, we have touched a couple of times in this podcast. Okay, we say Indonesia, isolated phenomenon. Are we all of a sudden seeing a US slump? Yeah. We are fully aware of that, of these situations. It is not that we can point at sort of new, overseen upside opportunities in the world, but
Mm-hmm.
there's a lot of picks to do out there and a lot of good stories. And that makes us still comfortable with the world and with the outlook. Yeah, but we probably see that it's not getting easier, but there are a
Mm-hmm.
lot of good opportunities. And this is how we see. So the sunshine is still overweight. Yeah.
Thank you, Peter. That is very insightful. And as always, we will continue to watch and assess global developments as they come. Thank you, Peter. And thank you to our listeners for tuning in.
Thank you. It's great to be here.
We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.